I somehow thought that you will be loyal, or what can I say? You will be still fond of your old business, and you will argue in favor of some laws to be rewritten. No, you don't think so?
No, I believe in disruption. See, if you, in 30 seconds, if you covered us right from the beginning. We started life in an era where everything was done in a branch.
There was no ATM.
The bookkeeping was kept in done in the bank. Handwritten accounts were kept, and maybe some had some rudimentary computers. Then we said we will go to back offices, and you had back offices with 3,000-4,000 people. And then very quickly, within 2-3 years, the back office vanished because straight-through processing came. And you adopted to that. And then, of course, we brought the ATMs in. So it's a continuous transformation which has kept you efficient in this. And I am now saying, and this was in an environment where competition was within yourself. There was no outside competition. Now you have players from a variety of fields coming in. And it's fintech today. I think it is going to be a variety of other players also.
It can be Amazon, it can be...
Anybody who can leverage technology appropriately is your competitor. So you have to be paranoid about this to survive in this tomorrow.
Okay. Well, let me look at another problem this evolution of competition to banking has thrown up. How do you finance capex? Until now, because there was this reliable money, you financed through them. Now, all the current account is not salary account. The current account is mutual fund, insurance money, which keeps vanishing. So how will you make banks pay for?
Again, a question that has to be asked is that what banks need to be doing? Fund finance. Capital expenditure. Banks, I think, as they evolve, the larger and larger part will be to the retail sector, because they are, as of now, best equipped, unless they are disrupted by a fintech. The corporates, large part of the corporate universe today, are cash positive. The cash flows are positive and can meet most of their growth needs. The margin they may have to borrow. And this is not going to change. This is only going to accelerate because companies are throwing up more and more cash. The need will be, and for a long period of time, at least another 10 years, if not 15 years, for infrastructure, funding of infrastructure. There, again, if you look at 15 years back and today, or 20 years back and today, what was the state of, say, the insurance and the long-term saving part of the economy, pension funds, insurance and so on, and today, that has changed dramatically. So I would believe that, and new instruments have come to finance these sort of outlays. So large part of infrastructure funding will come through a market process, which is outside the banking system. It's already happening. Would you have believed 5 years back that NHAI will be in a position to say, I can spend as much as I want and I will not need to borrow?
Because the InvIT.
Because of the InvIT structure. Because you created a pool of assets which you could put in the market, and that now could be monetized in a way. And then redeployed for your next round of thing. And then you have a continuous system coming till you run out of growth. And that we are not going to do till 2040s.
No, certainly not.
For the next 15-20 years.
So you're saying that banking model will be retail largely?
Everywhere else in the world it is retail, because otherwise actually you are carrying
market will fund.
Otherwise you are carrying a mismatch.
Yeah, you're carrying a serious mismatch.
If the banking money is really short-term saving deposits and some fixed deposits, and the average tenure of a bank deposit, banking system is about a year and a half. Yeah. And you expect to fund the infrastructure over 7 years or a corporate loan over 5 years. You are sitting on a mismatch, whatever you say. So it will have to evolve.
To corporate CPs and bonds.
And really, if you look at the lay borrower, the retail borrower, his or her need is to repay every month, and that's what you are collecting. And then you are in sync, and you're repricing the loan maybe on a quarterly basis or half-yearly basis. So that is appropriate financing. And beyond that, what are the fee services that you provide is again for you to, and the customer will decide whether he is going to get those services from you or from someone else in the market.